Well, good morning, everyone. It is Shooter. And we're going to go over swing trade notes this morning. Of course, at the end of our presentation, please do review our disclosures. Really, I'm playing off of some news that we have that's positive coming out of, as well as strength in the miners. Have some continuation in the dollar. So, we saw that little break in indices where we didn't see the FOMO continue into Friday's close. But I would think that wins a little bit, with the dollar continuing to head lower. At least that's what it looks like. But we're still sticking in this range between this 106 and this 100. I suspect us to be there for quite a little while. If we break below that, we're going to have one heck of a breakout in indices. All right, taking a look at TLT, we're continuing to grind higher here. The challenging part is I don't like the way the leg looks, because this looks like, even though it says this is an ABC, but this is looking to me like leg 1A, maybe a B, and then we get another C down. I don't like that longer look, visual on that. But our slope is very shallow in comparison to our last leg up off of our first news that we thought the Fed was going to start cutting. So we definitely don't have the euphoria in the market that believes that. They think it's going to be running longer. So whether or not the Fed blindsides us going into FOMC this summer, I don't know, be yet to be seen. But let's look at SLV. We were up at 28.97. Now, the 32 calls should be about 100 a contract now. I think they were about 85 when I first flagged it Friday, 89 maybe, somewhere around there. And, overhead, we're really just looking for a target of 30.74. I mean, not a lot of room to the upside. We're just looking for a little trade, pull out 30 to 50% on this. So, nothing aggressive, just staying conservative. A lot of little wins when we're this toppy in the market. Now, KWEB, was off of the data, growth numbers and everything coming out of Asia. It looks like some of the funding mechanisms that China has put into play, are working. So we're looking for the July 35 calls, also about $100 a contract. Here we're looking for a little higher swing target, 37.66. So I think we'll be in these for weeks, is my thought, because I think this will, if this is the uptrend, and here's the premise, and Asia is turning, then, this should, we should have a nice grind up to that C to 41. The breakout line is just overhead at 36.16. So we're not quite early, but we're definitely a good spot to enter. And then let's take a look at XME. Now, this is general metals and mining, so miners should do pretty well off of this move in metals. And realize silver has some catch up to do. Gold opened, when I looked this morning, we were up this morning. Main reason we're not in GLD right now is it's just too toppy. I can't see the room to get the trade out of it, enough room to justify the risk. So we're looking at the June 66 calls on XME. And simple reason is the spread stinks. In July. I mean, it just was, I'm not going to pay 55%. So, the 66 and 67s were somewhat in line. You're still paying a bit of a premium on those. And, basically what that's telling you also is that the markets believe we're totally bullish here. So, but that's what we have for this week, folks. Great trading. Until next time.